You there,
Are you,
Ash?
are you feeling 9% worth? Are you feeling worth 9% more today, Greg?
No, I feel 9% less. Um, you know, hey, Ash, I was seeing all this stuff popping up. I'm going, hey, I'm here. I'm here.
Yeah. Greg was just answering Cuda on here. So it's interesting. Greg and I were talking about Greg Riley and I were talking about this. Greg Cuda a bit ago, and we're going to kind of talk about this. So welcome to This Week in Lumber. Matt is probably trying to hit the Island Green today in Boise or in Coeur d'Alene, Idaho, at the Inland Outing. And if you're not there and you're here, that just means you didn't get invited and you're in the top secret, join the top secret club. It's a great event. If anybody is out there, love going to it. Uh, so Matt, it will be out. It's Greg and I today. We're kicking it off. So let's first talk about. And I know I'm glad Greg Coot is on here. Had a guy call me, and I know they were talking about in the show the other day. When is the actual CME contract going to start trading? Does anybody actually have the date of that one yet?
I do not.
Okay.
The press release said tentatively August 8th, but
Well,
it's subject to approval,
tentative.
and I don't know that all the final details have been hashed out. So, I mean, it's in the process.
So it's still under review, is what I can tell, right? Which is a good thing, but I
Yeah.
mean, so yeah.
So, but as you know, you and I were talking about this, inflation data, and you know, I I was thinking about it, and because I was listening to the talking heads, and I guess we're now talking heads, right? I mean, because here we are talking heads. And the crazy thing is,
except we're not reading off of a teleprompter. Please go to the next page, Greg. I mean, go ahead. Sorry.
Yes, I can. Yeah, you can ask me any question, and I won't go.
Welcome to This Week in Lumber. Oh, sorry, Jory just put that up.
But today's inflation number is the result of what was happening a year ago. The thing about all of the monetary policy is its impact is there's a long lag. There's like a 12-month lag on it. So
you're saying that printing money out of thin air actually can create a reaction in the future.
Yeah, it takes a while for that to work its way through the system. So, you think about a year ago, it was, inflation is transitory, and we're going to keep doing all this crazy stuff of buying, $40 billion a month of government debt and monetizing the debt, et cetera, et cetera. I look at inflation as kind of like, a smoldering fire. The time to put it out is when there's just a little bit of smoke, not when the whole house is like on fire.
Well,
I mean,
yeah.
At this point, the Fed is so far behind the curve that, with 9% inflation and 1.75% Fed funds, right?
Yeah,
that's
9%.
A negative. That's a negative real rate of interest of 8.25%. I mean, if inflation came down to 5 or 6%, where should Fed funds be? Oh, they should be like 6 or 7%.
Yeah, so let's talk about that a little bit. Then we'll circle back to housing, because as you and I were talking, let's talk about the CPI or the inflation rate in the 70s versus the Fed fund rate. Because I remember back in the day walking to school uphill in snow, but I also remember that we were having double-digit inflation. And you pointed out
Snowmageddon?
You pointed out the fact today that the Fed funds were at 4 to 5%, and they went up to 20% in the late 70s, early 80s. And the inflation rate went from up to the top end in the 70s and 80s of 15%, right? Does that sound correct?
It spiked, yeah.
It spiked. So that will never happen again, will it? Because it's always different this time. There's no. I guess here's the question. Here's the conclusion. I think that I really thought of when you're talking to it. And I've heard this transitory thing coming up a few times. again this week. People are talking about gas prices are falling and so forth. Um, so I guess the question is,
All the
is
conversation that you hear.
is inflation going away right away?
Um, Jane, you no. No, I mean, the thing that people miss is that, I mean, inflation is a monetary phenomenon. And all of this talk about, like, here's a for example, you know, would oil prices be as high as they are if if we didn't have an administration that was trying to do everything they can to reduce our production of fossil fuels? Oil might be a little bit cheaper, but it wouldn't be substantively cheaper, right? Um, the whole idea that, like, I look at people, hey, so who's to blame for inflation? Well, the Fed's got 70 to 75% of the blame, right? The current administration has probably 20 to 25% of the blame, and that's to do with all of their policies that are anti-growth, right? That limit supply, of everything through regulation, through and through all of the hurdles that they put up. And there's 5% that's other, like Ukraine and supply chain. They're only like 5% of the issue. So I think the Fed should go 2 percentage points when they meet in the next. Well, I think they meet in 2 weeks, and tell the market that they're going to go another 2% in September when they meet. And unless the data changes substantially over the summertime, that would put the Fed at 5.75%, and they could be done potentially if they did that.
So let's talk about what that means to how people deal with putting wood on the ground, acquiring new businesses, because basically the last X amount of years, buying new lumber yards, consolidating, trading lumber on the ground, we did it in a zero interest rate environment for the most part. Can we agree on that?
Yeah, I know. I mean, absolutely.
And as you pointed out, in the 80s, you were buying wood and putting it on the ground and doing stuff in a 8%, 10% market,
7, 8, yeah,
$150, $200 wood. So now we have wood that's $800, $1,000, and companies trading at huge multiples of earnings, going to other companies. When does the interest matter? Putting wood on the ground and starting to do all this, and when is that going to change things? And we're already seeing a few things where people are coming out asking for longer terms, and because one way to control your rate and the way the money moves is to slow down the way you pay people, right? That's one way to do it.
Yeah, no, I mean, I think actually, I mean, you bring up a great point. Is, I mean, the higher interest rates, and if you think back of every time that we've gone through one of these cycles, it's exposed something, right?
Yeah,
you had long-term capital management going under. You had Bear Stearns, right? I mean, you have you had the Russian debt crisis. You had the emerging markets debt crisis. And the thing I'm watching also is, look at the dollar. The dollar is at parity with the euro right now. The dollar's been incredibly strong, and that's something, I mean, that has a big impact on the markets also. I mean, it's a global market, right?
Right.
So
No doubt about that.
Value of the dollar has a big impact.
So let's go back to the housing conversation that we started this whole thing on the phone a little bit ago, you and I, and got into the Fed funds rate. So one of the big things that's coming up right now is everybody's talking about cancellation rates. So how long have cancellation rates even been tracked?
They started tracking cancellations in 2017.
Okay.
So we don't have
So,
a lot of data.
yeah, and I think one of the things with cancellation rates being at, I'm saying people are saying somewhere around 15%. Does that make sense? That's the number I hear thrown
Well,
around.
it came out for June. It was 16%.
16%. So I'm not sure exactly how that's tracked, but I do know talking to people,
The
even
average
as
over the last 2 years has been like 9 or 10%.
so the average in the market's been 9 or 10%. People went out, if you remember, you reminded me this the beginning of the year or end of the year last year. People didn't even know what they were selling homes to people. Uh, basically, um, they were basically selling homes to people without a price on them and say, we're going to deliver it at some point in the future. Give us a check. We won't cash it, or we will cash it. So I don't know what those actual cancellation rates really mean, right? So I think you always come back to the thing. We're going to have to really see what completions are coming up here.
Yeah, housing starts come out. Housing starts that come out next week. I mean, the numbers that I'm going to be paying attention to are, yeah, we're going to look at starts and permits, and I'm going to give you this is like a whisper number. They're going to be down. They're going to be down. They're going to be lower. But I'm going to watch I'm going to watch the completion rate, which I suspect will spike up, which will increase the supply of homes. And I also want to see, like how many houses are under construction and what are the authorized but not started. I mean, people look at those headline numbers, but I really look at those ones under the hood, give you a lot more information about what's really going on out there. I mean, the good, the bad, the ugly. I said, Ash, I was going to talk about it. So, the good is that we're still at a really good run rate for housing. Million five ish something rate.
And what do you always say we need to stay even, like with demographics growth?
I mean, everybody says that's kind of the equilibrium number that we need for to take in account scrapage, natural disasters, and account for population growth. But so the good is there's a decent pipeline of business right now. The bad is that we're going to build less houses in the second half of the year. The question is, how many less are we going to build? And that's going to be the determinant in terms of like what the trading range of lumber is going to be. And the ugly is that there is no way that we are going to avoid a fairly decent correction in housing next year. There's just I just don't see how we can avoid it given the backdrop of the Fed has no choice. They're so far behind the curve. They're going to raise interest rates. They'll probably raise them too far. And the people one of the things people look at and go, oh well, employment's still really good. And they're absolutely right. That is the most lagging indicator. When the employment numbers are their worst, that's when everything's all behind us. That's the last thing that shows up in the data is employment.
So when you say housing for 2023, are you talking about pricing, volume of building, days on the market for existing homes, or all the above?
Yes, all the above.
Mm-hmm. Okay.
Yep.
Okay. Makes sense. One thing I'm noticing too, I read an article this weekend about existing homes and how for the past year people were waiving contingencies and selling homes, and now the crack in the foundation matters, right? So people aren't
always
just going.
Mattered.
It always mattered. It always mattered. So what I think people are going through a home now, and are they still selling? Yes. Are they probably being a little bit more diligent about the process? I believe so. Are houses less affordable? I think yes, they are. The plus side of it for builders, some of their input costs, like lumber, are getting less expensive, right? And it sounds to me in some parts of the world, I know some people will argue this, that labor is easing up a little bit on the construction side, right? And if that's the case, that's why you're going to see completion levels go up. And with completion levels going up, you also see probably home builders not starting as many new homes, right? And that's kind of what I'm hearing out there. They're trying to work on what they've got under construction now.
I mean, it's, in keeping with what we've been highlighting for several months with the housing data, is that, the number of houses under construction and the disconnect between starts permits and completions was going to have to rectify itself, and it's going to rectify itself by starts and permits falling down to, somewhere in 1.4 million to 1.5 million range. The other thing that really tells me about how there's a change going on out there is, lumber. There's never been a shortage of lumber, right? We've allocated the supply of lumber by price. Whoever was willing to pay the most got as much lumber as they needed, right? But
Wait a second.
a lot of
Wait a
those
second.
other,
I talked to people today that said with all the shutdowns in the East and everything, there's a potential shortage of lumber. Is that not true?
there is never a shortage of lumber because it's always available at a price. And anybody's free to call me or send me an email and try and tell me how that's not the fact. But on a lot of other products where the prices are fixed and they're on quote unquote allocation, that's been the real stickler on the market. LVL, siding, to a lesser degree, trusses, I-joists, those types of things. But what I'm starting to hear is that the availability of that is changed significantly, and it's much more available than it was, shockingly.
Look, I had a guy call me this week and say he had extra I-joists he wanted to move.
How can
I
he
won't
have
say.
extra? Is a shortage of it?
Well, they said that they bought extra in case during a shortage to make sure if there was a
Hoarding?
shortage. Yeah, but it
He
makes
was hoarding.
perfect.
Hoarding.
That was smart to do, right? But that's what causes. So I guess what I'm saying is some of that stuff seems
So
to
that's
be.
what created the problem. People doing that.
Well, I think that's certainly part of it, right?
Okay, I'm just checking. Yeah.
Yeah. You lost my train of thought here. So
Sorry.
yeah, no worries, no worries. Lumber wise, let's
Joe,
go back.
that happens to Joe too, so don't worry about it.
Let's go back to the lumber price. We made a big move on the CME over the last month and a half, right?
$200. I mean, it was
Percentage
40%.
40% move. Okay,
Yeah,
that's a big move by any measurement, right?
that was prior to 2000 and in 2018. That was the average annual volatility in lumber.
So how is the cash market moving along with it right now?
I mean, cash market was very oversold. I mean, that having been said, the market had fallen close to 60%, and so I mean, the market had a hard short covering, and then kind of fill in back buying, and as I said, is one of the things is we're in an environment where the current level of business is pretty good. It's pretty good.
Right. Right. So how do you see what I'm seeing? And again, I'm not trading lumber every day, but I talk to people every day. And ever since we shifted 2.5 months ago, we can argue close from a seller's market, which we can all agree it was a seller's market for a year and a half to 2 years ish, to a buyer's market. And from what I'm hearing out there, people just are not keeping. Obviously, they're not telling me the same size inventory on the ground, nor do they want to. And they're actually trying to go out and set up things where they don't have to. So, in order to have a sustained rally and a big price move, you would have to have a extensive inventory build. I'm not saying that can't happen, but do you see that happen going forward with everything that we've seen now come out across in the last month?
No, I mean, I think a $200 move is I look at that as an extensive price move. I mean,
It's a
$200
huge price
$200
move.
on $500 lumber is an extensive price move. It's just not, we used to see that in like 2 days or a week, and those days are gone, Ash. I've been saying, the good right now is that nobody has excess inventory in the pipeline,
True.
and business is pretty good. are we living off of kind of the backlog of business? Absolutely. And as I talked to a guy this morning, I mean, there still are shipping issues. That's still an issue, shockingly, but it's still an issue. Um, and we do have summer shutdowns in Eastern Canada. So those two things are acting to artificially create, and I say artificially, I mean it's real. Create some tightness in the current market, which I think could easily extend for 2, 3, 30 days, maybe even deep into August. A lot of that's going to be dependent on what end use consumption actually is in July and in August, and how much does it fall? Are we trending down 5 to 10%? Or are we trending down 10 to 20%?
So now I remember what I was going to ask you during that whole thing.
I knew you would.
Yeah, so the fish oil finally kicked in. So I think it's important to remember how we're different. I mean, the listening to this, everybody might think negative. On the positive side of things, I don't think we're going to do what we did in 2006 to 2011. I think we are of a whole different market. We stay steady. Output stays strong. Are we going to have little hitches and bumps in the road? Well, we're going through that right now, right? And I think everybody's aware of that, and we just have to deal with it. But I believe that the consumption demand will still stay adequate, so you don't have to have all these closures at these manufacturing facilities, all these shutdowns and stuff, which is good because you want people to be fully employed in our industry. And I think there will be enough business between repair and remodel, multifamily bright spot, and single family that this thing continues to and industrial continues to kind of plod along. It may not be as wonderful as we want it to be, but it still won't be feast or famine, hopefully, like we saw through that debacle through the 2008, 9, 10 market, if that makes sense.
Yeah, I mean, absolutely. We're not going to go down and build 300,000 houses on an annualized rate. I mean, a healthy kind of rates from $1.6 million to $1.4 million, $1.5 million range is I mean, that's still very, very healthy.
Right, which is good. Which is good because that means that our market, our industry, both in manufacturing of lumber and forest products and in home building, is evolving. And there's good things to big money coming into these industries because they hopefully take out a lot of that volatility that we saw in the 2008, 2009 market.
I don't know, Ash. I mean, that's going to be the real question. As you don't go through what we've gone through the last 2 years, and as you go through a period of like contracting business, it's that whole thing of like you're going to see who's not wearing any they're not wearing their jockeys when the tide goes out. There is going to be something that surprises us. There is going to be. I don't know what it is just yet, and a lot of it's going to depend on the severity of how much of a contraction we see next year in housing. The milder, the less of a factor it's going to be.
Well, you and I have certainly seen things happen to people that we never thought they could happen to, right? We've been on the receiving end of that. And I mean, right? I mean, we could talk about it and laugh about it now.
Hey, mistakes were made. Others will be blamed.
But the fact is, I remember coming in 2007, 8, and I'm like, wow, who went out of business? I thought they had so much money, right? And
well, yeah. I mean, but we're not in any type of environment like that.
Understood.
It's like that's not what we're dealing with. We're dealing with something, with something completely different. And
But
but
Buzz was saying on here, I missed a bunch of comments. Sorry about that. Sean was saying in the 80s there was no 6 to 8% money. Yeah, it was probably higher than that, right? But Buzz said my dad had to borrow money at 22% in the Carter days to save the lumberyard. Yeah, I mean, that's right. I remember the bank calling my parents and asking if they could pay their mortgage off early because they had put it out in the 60s and the rates ran up, right?
yeah, that's 1980s was savings and loan crisis, where all the savings loans went out of business. Yeah, my first mortgage on the townhouse
Yeah.
was at 14.5%. And it did
Is
at
that why
14
you
and a half
is that
percent
is
of
that why you
14 and a half percent of 1 year arm is the way to go. Let me tell you.
Well, I know it's not, Mike and I helped you pay some of that mortgage for a few years.
Thank you very much.
Well, thank you for giving us a place to stay.
Yeah. And you know what? You had Big Daddy on the couch. Remember Big Daddy on the couch?
Oh, Big Daddy. Yeah, I remember him. We had a lot of roommates rolling in and out of that place. But all right, well, cool. That was
All right. Hey,
that was
listen, great talk. I'll see you on the deck this weekend.
yeah.
Okay.
But we'll do another cigar summit on the deck.
Oh, right on. All right. Hey, Ash,
All right,
have a
Greg.
great one. See you
Yep.
later.
Thank you.